Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. In this presentation, I'm going to go over a whole bunch of different things. It's not related to uranium or gold. For the most part, it's not. It's mainly energy type companies and a couple other ones mixed in, like home builders. I'm just looking at charts kind of randomly, seeing what the best opportunities are out there. I don't like to restrict myself to one specific group, and that's why I named the channel Finding Value. Because it's finding value wherever I can. And I try to combine multiple things. I try to combine valuations, market conditions, and all that stuff together. And still, it's a long-term approach. I try to identify when the market conditions are changing. I think that they are changing. We're going into an expansionary phase of real estate, which that's a fact. Which then has ramifications on interest rates. But they're doing QE to hold interest rates down and trying to prop this entire bubble up through interest rates. That right there is probably the most manipulated market out there because interest rates price all assets. It determines money flows as well. As interest rates go up, people sell bonds and they sell stocks, and the PE ratios start to contract. That's because you can get a risk-free return on treasury yields. And that's how interest rates basically prices the entire market. And that's why they control interest rates, or try to. And here I'm just identifying technical analysis patterns, but if you like more of that analysis type stuff, I do go over it quite a bit. Sometimes I go over all of the market conditions and also real estate and give updates there. So if you guys like that, subscribe to the channel if you haven't. And here we go. The first one I've got going on is an close-up view of REMX. And again, this is not financial advice. I don't want it to be used as such, but it is just my financial opinion. So we broke out of this pattern here. This is the pattern. We've seen this pattern kind of getting scribed out in some other sectors. And we broke to the upside of this pattern, and we're kind of basically have a rising or ascending wedge pattern that's starting to develop. We'll see if this thing breaks to the upside or the downside. I don't know which way it will break, or sometimes they just kind of roll out of it. This isn't a very big wedge pattern. So even if it were to come down, it'd only come down maybe to like a little under 110, 105, somewhere in that range, and then kind of go from there. But I just wanted to show you on the short term that we could have a little pullback in REMX. This is REMX on a long-term time frame, and I think the chart looks absolutely excellent for a move potentially higher. It's going to take some time, but this is the pattern. We broke out of this basing pattern, and we could see a very good move higher over time. Rare earth strategic metals are needed for electric vehicles and renewables. So if we were to ramp up these things in terms of renewables and electric vehicles, the rare earth and strategic metals, I think, would do very well. Now here's lithium. Someone was talking about global lithium, or LIT. Very similar pattern to REMX. It's basically the same pattern in this breakout. We had a short-term little pattern here. It broke to the upside. It's been chopping back and forth and moving higher. Looking at it from a long-term perspective, it's right basically where REMX is, just further along. So it did the same pattern though. This kind of double bottom, popped higher, and it's moving on higher at a very good ascent. Right here, if you look back, is where REMX is. It's just breaking out of this kind of double bottom pattern. It's the same pattern. And then look what happened afterwards. Straight vertical. So, you know, LIT, I don't know if I'd be buying it up here. This is quite high, but I do think that money flows are definitely flowing into global lithium. If you were to do the analysis here, this is kind of the end of the consolidation. You get that hump, and then it just started moving up rapidly. So this could go quite a bit higher. But I'm not entering that. I chose REMX over it. Another one is SM Energy. That's one that I like a lot. Zoomed in here, you can see this nice move higher. We're kind of in this consolidation pattern starting in March of 2021. We've been just kind of moving sideways, scribing out a pattern. And I think we'll eventually end this pattern at some point and move higher. When looking at it from a big long-term picture, and this is the picture that I prefer to look at, because I'm a pretty patient guy. I can wait years for my investments to do incredibly well and return thousands of percents. For some of them, the possibility. But here we are. We're in this downtrend, this big, long downtrend. We hit our head on it. It paused for a little bit. That is this section here. We hit our head. We couldn't. It's like this invisible resistance line that we couldn't penetrate. And we finally broke through it here, and we're back testing above it. So we broke through here, and we're back testing here. But we're still a little bit higher than this entire, we'll call this a mess of trading range. And we're just a little bit higher than it. So it's acting as a support. And I think eventually this is going to launch higher. Could be dramatically higher depending on oil prices. And I am a bull on oil. We've got a ratio of about 25 barrels to 1 ounce of gold. It means that oil's incredibly cheap. We do have to break out of this lower resistance if you look at the ratio charts. And once we break below 25, I think we'll run a good amount, probably to like a 10-to-1 ratio or lower. If we hit a 10-to-1 ratio on gold, that's a $180 oil, maybe $200 oil, something in the range of that. This could very well launch higher at those prices and maybe even exceed its previous all-time highs. I can't tell you for sure if that's going to happen, but if oil does reach those levels, I would be highly ecstatic and highly optimistic on SM Energy reaching very high levels. Now, another company that I like is Cdev. This is a highly leveraged oil and natural gas company. It's a small oil and natural gas company, we'll call it kind of a small to mid cap company. I think it's in the low one or 2 billion market cap. But this thing's got a high amount of debt. It's highly leveraged to oil. And if oil were to go up to those levels, I would think that this would go a lot higher. Looking at it from a long-term perspective, and that's kind of a perspective I really like, we broke this downtrend coming here all the way through. It broke out and back tested here. I bought coming up in here, and then I bought again right here. And then we're coming on up, and we're developing basically this opposite pattern. It's called reverse symmetry, I guess. You kind of cut this in half, and then you take this portion and flip it over here. And that's kind of what you'll see. You'll see the similar patterns here, like how this U shape scribed out, this U shape. And then you kind of come up, and it kind of does these little, zigzagging patterns up. It's probably what it's going to do on the way up. But right here, this looks like a reverse head, or a shoulder, head, shoulder, reverse head and shoulders, similar pattern to that. I don't prescribe to it having to have this perfect looking pattern and all these different types of rules to it. It all depends on where the value of oil is. If oil is going to go higher, this chart's going to go higher no matter what the goodness of the pattern looks like. But it's a pattern. It's replicating in terms of reverse symmetry, this side versus this side versus this side, and hopefully we can move on higher at some point. Tetra Technologies. This is a highly indebted energy service company. And this one looks good too. You got nice big moves higher with small little down days. Not many sellers here. And on a long-term perspective, Tetra Technologies broke its downtrend. On a very long-term perspective, all the way back in 08, 09, and I just kind of extended it out. And we broke out and kind of back testing right now. And I think this could go higher. I own some. Beam Global. This is a solar renewable energy company, I should say. They do provide solar services and like these little charging stations, I believe. This guy's coming on down. We still are in a downtrend. We do have higher lows coming up in here. If we can hold in here and continue with these higher lows, maybe we can pop out of here to the upside. We'll see. But it's still in a downtrend. There's still a lot of risk here buying it. Looking at it from a big picture view, we got the downtrend line. We broke to the upside. This could be considered almost like a back test. We'll see if this thing heads higher or if we are still in pullback mode. We should see it if we break the lower, this lower line right here. I think if we break that, we bust out downward, then we could see maybe a pullback, maybe. But right now, we're still in a downtrend. We're still in this pattern here. Here is SunPower Corporation, another one. You draw the line across. It's got all these big motion, big support through here. It broke through it, kind of is coming back, and it's kind of resting on top of its support line. I'm curious to see if this thing's going to take another run at it, or maybe not. Here's Canadian Solar on a big picture view. You draw the line across, it broke through, it's resting on its support line above it. It's probably got a little bit more time to kind of come out of this, but I'd like to see this thing exceed its all-time highs, maybe do like a double or something, and then I'll put it into a free ride or so. If that happens. Now, this is Hovenen. This is I think they're more of an apartment building, I think, builder, maybe some homes as well. And got this big downtrend line. It broke to the upside, and it always does this little pullback. But this thing's looking pretty good. This is one heck of a move from $6.25 in March of 2020 all the way to $150 almost. That's impressive how fast this thing has moved. Very impressive. Here's Mdc Holdings, another one that broke to the upside of its little pattern here. It's kind of coming on this sloping upward channel and broke to the upside. Doing a little back test right now. I'm curious to see where this thing goes. Lgi Homes, another one. We're playing with its upper trend line right now. Maybe we'll break higher. And then KB Homes is putting in this massive ascending wedge pattern, which usually breaks to the downside, but if COVID didn't break this, I think we're heading higher. This could be a big move higher out of all the home builders. Now, Apple, Apple looks like a bubble. I mean, this thing, it goes vertical. Whenever you go vertical, I try not to mess with it. I actually think I might have done another chart here. So let me see if I've got the Apple chart. I don't. Or no, here's the NASDAQ one. Let's put it right here. I've got NASDAQ, which is another chart here. And this is very similar to Apple's. So this is Ethereum on the right. This is NASDAQ. Again, why am I comparing these two? You can even see the previous bubble is the previous bubble here of the 2000 bubble, and we're getting this other bubble here. And I don't know if this is correlated to this, but it's on a different time scale, Ethereum's time scale versus this. But we came on up. We are where I propose is the arrows at where this arrow's at right here is this move, and then we're putting in a top at any point here in the NASDAQ is my opinion, but we'll see. Obviously, this is long and drawn out. You can see this is really kind of long and drawn out here. So it's going to take some time for this bubble to pop. And I'm not calling a top here. It's difficult to call tops. But I just wanted to share that with everyone, this chart here. We have gone vertical in a lot of these companies like Apple and some of these NASDAQ-type companies, NASDAQ Composite. So I don't know if it's going to continue, but looking at the home builders, it looks pretty strong. So the home builders look like they want to go higher. And if that's the case, I mean, we're in an expansion phase of real estate. We're just starting it. And I don't know why the home builders wouldn't make a lot of money. So I think that, home builders are a good spot to be in. Those ones that I showed are the ones that I own. I don't talk about them a lot. I just kind of threw money in a long time ago, and I've just been sitting in them. I haven't been doing anything with them. I'm doing the same thing with all of my companies. I'm a buy and hold type guy. If the valuations are cheap, I'm going to buy the companies and hold on. There's no reason for me to sell something that's cheap. Even if the chart may look kind of bad, why would I sell it? Just hold on to it, accumulate it over time, and then that valuation will eventually revalue itself. Now, I know that some people think, well, you could be trading in and out of all these companies. You're missing opportunities somewhere else. I don't think like that. I try to build a strategic investment portfolio based off of what looks to be the best value. And when the market conditions are changing like they are, now it's just a matter of time. And I'm a pretty patient guy. I can spread stuff out, and that's my strategy. What I do for portfolio wise, the stuff that I'm showing you here that's highly volatile, that's probably about 20% of my overall net worth. That's what I have in it. I have another 20% in lower risk stuff, mainly in terms of like stocks, mutual funds, and royalty companies and stuff like that. Then I've got a good stake, maybe 20-25% in physical precious metals, and then I have real estate for the rest of it. So that's kind of my portfolio mix. If you guys have 100% of your money in these smaller, very volatile stuff, I don't know if I would do that. What I would do is I would make sure that you're in investments that you can hold on, you're not leveraged, you can ride through things, and you're going to wait for this valuation to come around. And when the valuation comes around, some of these things move very quickly, and they can change your life with the size of the moves. And what we use for an exit strategy, because some people ask me about exit strategies, we use the ratios. We use the commodity to S&P 500 ratio. When that gets expensive, when commodities are expensive to stocks, which is going to be a long ways away in terms of value, we are way down there. That's when I'm going to sell. And when the ratios of oil to gold, uranium to gold, all those things signal a sell point. But I think we haven't even like warmed up yet. We're still chopping sideways, trying to find a bottom here in a lot of these sectors. We put in a nice original move, but we're pulling back, kind of our first big pullback, and then the fireworks will come. But I just can't tell you the exact timing. Hopefully you guys like this content. Give me a thumbs up. Appreciate you guys listening. This is Finding Value.